Are you a broke loser? Do you want to stop being a broke loser? Well, buy my book on Amazon. It's $2.99 for an ebook or $9.99 for a hardback. It's called Stop Being a Broke Loser. If you buy this book, you will no longer be a broke loser. So buy it now. I want Walmart, but it's too expensive. Welcome back to Strongman Personal Finance. I'm Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser. You may have seen the ad that I put at the beginning of this video. And lover of Walmart as a company. Like, I am obsessed with Walmart. I think it is the best company in the United States because I'm cheap and I like good deals and good value. But I am not a lover of Walmart as a stock right now. We're going to use Everything Money software and we're going to go through some of the financials and we're going to see how much I would actually pay for Walmart. Now, Wally World has a market cap of $413 billion. So it's a pretty big company. But you compare it to the likes of Amazon, which supposedly has the same free cash flow as Walmart. It's pretty small compared to at least those companies. Price to sales, 0.73. So let's look at PE. 41 over the last 12 months. For a staple like Walmart, that's pretty freaking crazy, okay? I'm not sure what people are pricing in to Walmart to make it so expensive. Maybe it's because of online delivery. That's my suspicion. I'm a big fan of their online delivery, and that's kind of what they're doing to compete with Amazon, which is maybe why it has a higher PE ratio. I don't know. And then the average PE ratio over the last 5 years is 35. That's still pretty freaking high for a staple like Walmart. Profit margin, 1.8. That's really low. Return on invested capital, return on equity, 5-year return on invested capital. Those are all good. 12, 13, 12%. I mean, not bad percentages, but let's go ahead and look at the income statement. So I do it by 4 quarters, so I get the most up-to-date information, and then it goes 4 quarters back. So Walmart has had very slow revenue growth over the last 10 years because it's a very mature company. Okay, that's why I say that PE ratio is pretty freaking high. And we had the pandemic, which probably gave them a temporary boost in revenues with all the stimmy checks coming out. And I don't know if that's going to continue once all the little checkies run out. I think the unemployment benefits are running out pretty shortly, if I'm not mistaken. Okay. So the revenue has been growing. I mean, it has been growing. It's just been growing slow, which is, not surprising. Profits, 16, 17, 15, 15, 14, 12, 5, 12, 17, 10. Wow, it looks like net income has been decreasing, which is actually not a good thing. Over the last 10 years. It seems like almost a steady downward trend. And then they had that, pretty massive increase in net income in 2020 for probably because of the pandemico. So that's not good. Revenue's increasing, but net income is decreasing. So they're becoming slowly less and less profitable. I still love this company. I still love it. Okay. And you can still make money with share buybacks and stuff like that. I'm not saying it's just like a dead company. Obviously not. But that's that for the income statement. Balance sheet. I wonder if they have the shares outstanding here. No. Maybe it's on the cash flow statement. Am I freaking crazy? Why do I never see the shares outstanding? Oh, because it's on the income statement thing. Okay. I'm learning this software. Bear with me. Now, yeah, so they've been buying back shares, obviously, because it's such a low-growth company. They have to reward shareholders by buying back shares. So it's very important to look at the free cash flow for this company to see if they can actually afford to do that and pay out the dividends. So shares outstanding have gone from 3.38 billion in 2012 all the way to 2.8 billion. So that's not bad, not bad. And then dividends per share have been increasing. So that's how Walmart rewards the shareholders. Share buybacks, dividends, because obviously it's not a 10x growth company like certain people I know like to invest in. All right, so statement of cash flows. Look at cash flows from operations. So $27 billion in 2012, $31 billion in 2021. I don't know if that's temporary. We'll see. But you can see there's been declines and then increases and then declines and then increases. So it kind of goes back and forth. So for cash flow from operations, if you care about that, which you should, because that's their income on the cash basis of accounting, you kind of want to get an average of that, maybe like a percentage of revenue, kind of like they do with the stock analyzer tool, because it's not like steadily growing or decreasing. It just goes up and down over cycles. All right. And then we have, where's the free cash flow? So free cash flow was 14 billion 10 years ago. Then it dropped to 11, 12, back to 14, 17, 20, 18, 15, 18, 21. I would also use the average as well, because that just goes up and down, up and down, up and down. Cool, cool, cool. 8 pillars. So we got 5 greens and 3 reds. P ratio. Yeah, I think that's too freaking high for Walmart. I love the company. I love it. I have their Walmart, what's it called? I have the Walmart delivery app, or Walmart Plus. I paid $100 for that. Free delivery for food. And, I just love everything about the company. But when it comes to the stock, it isn't a good buy right now, which kind of breaks my heart, okay? Net income growth, 5 years, negative. Price to free cash flow. So Walmart's expensive. I guess people are assuming they're taking on Amazon. Now the question is, what would I buy Walmart for? Now let me reiterate to you degenerates, you YOLO investors. If I'm going to buy an individual stock, I want at least 15% return on my money. Because otherwise, I'm not going to take the risk of buying an individual stock. Instead, I will put my money in my tax advantage accounts and buy Total World Stock Market Index ETFs. I like VT, but you can buy whatever you want. Tesla, blah, 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 blah. So I did a 5-year analysis of Walmart, and I'm very conservative with my estimates. So I said for revenue growth, worst case 1%, best case 3% over the next 5 years. Share change, worst case they buy back 1% a year. Best case, they buy back 2.5% a year. And that might actually be high. We'll see. Profit margin, 1.5 to 2.5. Free cash flow is a percentage of revenue, 3 to 4%. PE, this is where it gets really conservative here. Walmart is a massive established company. So I use 8, 10, and 12, both for PE and price to free cash flow. And of course, desired annual return, I use 15% for each, okay? You don't have to do 20, 17.5 and 15. You can look and see, based on each assumption, what return you want based on each assumption. So I analyzed it and I got 39 buy point for the middle assumption for a multiple of earnings and a 68 buy point for a discounted cash flow. Now, if we increase the PE, let's say to 20, for price to PE and price to free cash flow. Well, it increases the buy point, but even then it's overvalued. So you'd have to do 25, Jesus, 30 PE? Okay, so if Walmart is trading for a price to free cash flow of 30 using the middle assumptions, it's a buy right now to get a 15% return. But I don't think in 5 years Walmart's going to be trading for a 30 price to free cash flow. Right now it's trading at like a 19, okay? So keep that into consideration. Keep that in your back pocket. But that's it. So I would buy Walmart. I mean, if it dipped to 68, I would buy it just because I love Walmart, okay? It's like, it'd be an emotional investment. I put like maybe $1,000 into it. But I wouldn't buy it right now. And to be honest, I would personally, if I had it as an individual stock, I would probably sell it. But you can do whatever you want. I'm not telling you to sell it or buy it. So that's it, ladies and gentlemen. Did you like this video? Are you impressed with Walmart? Think it's amazing? Do you think I'm wrong? You think it's going to 10x? Well, you let me know in the comments. Like, subscribe, tell your friends about me, and you'll have a wonderful day. Choo!